What's going on, guys? My name is Richard and welcome back to the channel. Today in this video, we'll be talking about how to handle market pullbacks, and this also transfers over to corrections as well. But obviously pullbacks are a little bit less severe than market corrections. But I've gotten a ton of questions in my comment section as well as on Twitter about this subject, so I thought we'd make a quick video about it. So here's the agenda for today. Definitely a lot of basically really valuable information in my opinion, especially if you're a newer trader. We'll talk about how time frame matters, staying objective and keeping a strong mindset. This is so important. How to track market health, routines during corrective markets, how to identify leaders, when to re-enter the market, and also some key takeaways. And we'll be covering a lot today, so definitely stay until the end. And if you do enjoy the video, please go ahead and take the time. It just takes a few seconds to leave me a like down below. And of course, subscribe to the channel if you haven't already. Diving in, let's talk about how time frame matters. So this is really a question of investing versus trading, because how you're going to react to market pullbacks, corrections, is going to completely be different depending on your time frame. So investing, obviously, you're holding for the long term, ideally a few years, decades even, while trading is a lot more short term. There's swing trading where it's 3 to 5 days. There's position trading where it's a few weeks to a few months. And also, of course, day trading is very short term. And depending on what fits your personality, what fits your lifestyle, investing versus trading, you're going to react to market pullbacks very differently. For instance, investors basically treat these as opportunities where stocks go on sale, while traders like to manage risk and wait for that uptrend to resume. So when the market starts to pull back 5–10%, traders are most likely getting stopped out positions following their sell rules, while investors might be starting to dip their toe into the water and use their cash reserves to buy a little bit of their favorite positions. And because of these different timeframes, which are the root cause of many arguments I see on Twitter, basically traders and investors should be handling these pullbacks differently. Traders who are a little bit more concentrated in their positions, taking 10 to even 25% positions, will be managing risk, getting stopped out, while investors might be dipping their toes in the water and adding kind of 1% positions to their favorite holdings. So depending on your style, you might be taking action, or even if you're an investor, your action might actually be doing nothing, inaction. It all depends on your time frame. Finally, I think it's also important to keep in mind the long-term trend of the stock market and make sure that's always part of your perspective. So over time, the market is very strong. We've got so much innovation going on in the United States and so much value coming out with new IPOs every single year. And this leads to incredible growth over time. So that's basically why it pays to be a bull over the long haul, regardless of whether you're a trader or investor. So time frame definitely matters when it comes to reacting to these market pullbacks. Moving on, I want to talk about staying objective and keeping a strong mindset. So much, regardless of your time frame, in how you basically react to these market pullbacks, comes down to sticking with your plan and making sure your mind's in the right place. And regardless of your time frame, I think it's very important to establish a weekly and daily routine to check in with your holdings, make sure you're managing things correctly, and have a plan no matter what happens. So if you're a trader, have that stop loss set so you know when to get out because it hit your line in the sand. And if you're an investor, be ready to add at those points where you think the risk reward is worth it. And I think this is very important. Make as many decisions as possible outside of market hours. I like to spend some time on the weekends as well as after market hours to basically analyze all my different positions, move up stops if I need to, and basically visualize what can happen, whether we gap down and I have to manage risk quickly during that morning, or if we continue on with a strong uptrend, I'm ready no matter what. And finally, you always want to stay positive. The next uptrend is just around the corner. And as I mentioned on the last slide, the general trend of the market is up. And basically market pullbacks, market corrections are just pauses along the way, and they'll set up incredible opportunities in high-flying true market leaders. So always stay positive, keep a strong mindset, and plan out your trades and plan as much as possible on the weekends and basically before we go into a correction. Now moving on to how I track market health, I basically take a look at a few different things. First of all, the market indexes. I watch for distribution. I also keep track of my leaders list, which is shown right here, basically seeing whether we're holding above moving averages, trending, or showing signs of distribution once again. And I also take stock of my personal trading performance. For instance, if over the past 5 trades, I've gone stopped out 4 times, that's feedback from the overall market that regardless of what the indexes or leaders are doing, my personal trading is basically not doing well and I should take a step back, reevaluate, do some post analysis, and figure out what's going on, and if whether I should pull out the market completely and wait for my pitch and wait for setups to emerge once again, or whether it's just a few different tweaks, such as moving up my stop loss, being a little bit tighter, or basically taking profits more quickly. So this is so important. Listen to your own performance and basically incorporate that into the feedback loop in terms of how exposed you are in the market. And regardless of your methods, you always want to keep it as simple as possible and take a step back when analyzing the overall market health. And lastly, you always want to follow your rules as well. And a very simple way to keep track of how the indexes are doing and how the market is doing is to use a chart like this, which has various short-term moving averages as well as longer-term ones. And this forms a GMMA chart. Basically, if we're in a red, white, blue pattern where the red moving averages are above some white space above the blue ones, basically the market trend is powerful. We're in a strong uptrend. But if we turn things over and the short term cut under the blue ones, as what's potentially happening right now, things might be a little bit more iffy, and we might need a longer term correction, basing, pullback to reset things. So this is an easy way to keep track basically of the overall market trend, but I like to also take into account my leaders list as well as my personal trading performance. Moving on, here's a little bit about routines during corrective markets. So first of all, you have to do your homework. This is basically how you stay a step ahead in front of everybody else and prepare yourself for the next uptrend to take advantage of all the incredible opportunities out there in the stock market. You want to stay in tune with the market by keeping track of those market leaders and potential leaders emerging, and you want to track relative strength on a daily basis. And relative strength, if you're not familiar with basically what that means, it's basically stocks that are holding up the best. So on any given day, I make RS lists, which basically have a list of stocks that are outperforming on that particular day. And the stocks that show up again and again on my list over the course of the entire pullback are most likely the leaders that could be really great opportunities when the overall uptrend resumes. So that's basically what relative strength is. And I've got an entire video about how to scan for relative strength, which should be popping up right now and will be linked down below in the description. So take a look at that after this video. Definitely goes in depth into my scanning process and how I find potential ideas during a market pullback. Also, you want to take the time to perform post analysis. As I mentioned previously, take stock of what you're doing well, what you're not doing well, so you can basically incrementally improve and do better during the next uptrend. Finally, you want to study books and videos, basically sharpen the saw, improve your skills. And I'll plug my Market Chat podcast, which is interviews with US investing champions, hedge fund managers, portfolio managers. There's so much incredible material here in these interviews that you can really take and apply directly to your trading. So definitely check out this playlist, which will be linked down below in the description if you haven't already. Moving on, let's talk about how to identify leaders. So this goes a little bit more in depth into tracking relative strength. Basically, you want to look for stocks holding key levels, moving averages, forming proper bases, having low volume pullbacks when we're seeing a lot of distribution in the general market. You also want to see the relative strength line, which is this line up here, being in an uptrend. And this line basically tracks the performance of the stock versus the SPX. So if it's an uptrend, that stock is basically outperforming the general market. You also want to look for superior price performance in general. And also what's best is when all that lines up, all that price performance lines up with very strong fundamentals and growth numbers such as earnings, sales margins, institutional sponsorship. And if you see a bunch of stocks appearing again and again on your RS list that meet this criteria, basically you've potentially identified leadership groups. For instance, during the 2020 correction, a whole bunch of computer software enterprise stocks like Zoom, DocuSign did incredibly well and were showing relative strength together during that market correction. And that basically pointed you to the potential leaders coming out of that correction. So that's how to identify potential market leaders. Moving on, let's talk about when to re-enter the market. So if you've gone completely to cash or you just have a few positions left, you're basically waiting for some type of signal indication to re-enter the market. Basically what I like to do is wait for high probability setups where there's proper bases, constructive price action, where you've basically formed a nice basing structure over the course of weeks, and there's a lot of signs of accumulation such as pocket pivots within that base. And what's really important to remember is you don't need to be the first one back in the market or cash the very low to make significant money during another uptrend. In fact, if you wait for the uptrend to really confirm, such as with a fall through day, your probabilities of being in an uptrend are much, much greater. and that basically saves you money over time. So once again, you don't need to catch the low or be the first one back in the market. Let the market prove itself before you decide to re-enter. So you basically want to wait until the market resumes the uptrend. And as I say here, every day we get new information. So right now we're pulling back a little bit on the indexes, but if basically tomorrow the indexes produce a really strong day and the overall leaders are acting well, that might change my mind and get me to open a few positions and try things out. But if we undercut these lows and continue to basically show distribution, that might mean we're in for a steeper correction. So every day I'm kind of changing my opinion on the market based on new information. And that's the best way to go about it. And once you decide to get back into the market, what you want to do is practice progressive exposure, basically finance your risk. So if you open a few positions, basically what you want to do is if those work, you can then take that money and apply it to new positions or increase your general position size. And also you want to go ahead and listen to market feedback. So if you try a few positions and they don't work, that's basically telling you that the market just isn't right yet and you're better off continuing to wait. Also, you want to make sure that your initial position size is relatively small, maybe even a quarter of your normal size position. And basically, you want to make sure that you're not putting too much exposure on before the market confirms and you've already got some profits to work with. So this is really important. Practice progressive exposure. So here are some key takeaways from this video. Consider time frame, whether you're a trader or investor. Depending on your style and personality, you'll treat market pullbacks and corrections very differently. You want to stay in tune with the market leadership, stay on top of what stocks are kind of bucking the overall downtrend and could be the leaders during the next uptrend. And you want to really wait for your pitch and wait until the overall market basically confirms that it's restarting an uptrend. As I mentioned, you also want to focus on the leaders, focus on leaders, focus on leaders. I'm going to say that over and over again. This will give you basically a tip of what the market is going to do even before the indexes reveal their directions. And as I mentioned, you want to go ahead and practice progressive exposure to make sure that you're managing your risk properly and not getting too exposed too quickly before the market really resumes that uptrend. And finally, it's always good to remember that in the big picture, the grand scheme of things, that the market is generally going to go up. And you always have to manage risk, but most likely pullbacks and corrections are just setting up the next batch of opportunities. So I hope you guys enjoyed this video. If you did, go ahead and leave a like down below. It really helps me out and my channel. And of course, subscribe if you want to see more videos just like this one every single week. With that said, thanks so much for watching. And I'll see you guys in future videos. Thanks.